Hey everyone, welcome back to Corporate Decoder, the place where we unpack the juicy secrets hidden within those dry corporate filings. Today we're diving into LogicMark's latest report, and let's just say there's a significant shake-up brewing, especially when it comes to their stock. Alright, so LogicMark, a company involved in personal emergency response systems, has just filed an 8K report. This is a big deal because it means they're announcing something important that shareholders need to know about right away. What's the big news? Well, it's all about what happened at their recent annual meeting, specifically the votes on some pretty crucial proposals impacting the company's future. The meeting took place on August 15th, and it seems like some major decisions were made by the shareholders. Think of it like a shareholder democracy in action, deciding the direction of the company. The report details exactly what was voted on and how everyone cast their ballots. Before we get into the votes themselves, let's quickly look at who was eligible to vote. As of late June, there were over 576 million shares of common stock out there, plus some special preferred stock. This is important because it sets the stage for how much power each vote actually carries. We're talking about a lot of shares here, so even small shifts in voting outcomes can be pretty significant. First up, the election of directors. This is standard procedure, but it's always worth checking if the board members are getting the support they need. It appears all 5 nominated directors were indeed elected. Looking at the numbers, like for Challen Simmons, there were over 65 million votes for and about 22 million votes withheld. The other nominees had similarly strong support, so the current leadership team is set to continue their work for another year. Now, these broker non-votes are interesting. They happen when a broker holds shares on behalf of a client, but the client hasn't provided voting instructions. So the shares are there, but they don't count towards a for or against decision. The consistently high number of these non-votes across the nominees suggests a large portion of shares are held in street name and their beneficial owners are either not engaged or had other reasons not to vote directly. Next, the shareholders voted on who will be their auditor for the year. BPMLE was appointed, and it looks like this was a pretty easy win. Out of all the votes, a whopping 179 million were in favour, compared to about 18 million against. This shows a strong level of confidence in the accounting firm chosen to check the company's books. It's a good sign when shareholders agree on something as fundamental as who the auditors are. Now, this is where things get really interesting. Proposal 3 is about a reverse stock split. For those who might not be familiar, a reverse stock split is when a company reduces the number of its outstanding shares. Think of it like cutting a pizza into fewer but bigger slices. The company is planning to do this with its common stock, anywhere from a 1 for 300 to a 1 for 750 split. This is a pretty aggressive range, and the board gets to decide the exact ratio. The good news for the board is that this proposal was approved by shareholders. We see 130 steer into fewer but bigger slices. The company is planning to do this with its common stock, anywhere from a 1 for 300 to a 1 for 750 split. This is a pretty aggressive range, and the board gets to decide the exact ratio. The good news for the board is that this proposal was approved by shareholders. We see 130 decide the exact ratio. Following closely on the heels of the common stock reverse split, Proposal 4 deals with the same idea but for their Series C preferred stock. This means the preferred shares will also be consolidated and their value adjusted accordingly. Shareholders also approved this with 137 million votes for this and about 56 million against. Again, a majority is in favour. This indicates a unified strategy to manage the company's share structure across different types of stock. Notice the extremely low number of broker non-votes here, just 3. This is a pretty stark contrast to the first proposal. It suggests that for this specific vote, potentially preferred stockholders or those controlling preferred stock were much more actively engaged or had clear instructions in place for their brokers. This could mean the holders of preferred stock have a more direct interest in the outcome of these reverse splits, or perhaps a more concentrated ownership structure. Now, here's the proposal that didn't make the cut. Proposal 5 was about making some technical changes to the company's charter, specifically to remove language that prevented them from reducing the number of authorized shares. Shareholders voted against this one. We see 148 million against and over 10 million abstentions. This indicates that while shareholders approved the reverse stock split, they were not comfortable with granting the board the absolute freedom to reduce authorized share counts without further restrictions. It suggests a desire for continued oversight on such matters. And at the end here we have the signatures confirming the filing is official. Mark Archer, the Chief Financial Officer, signed off on this report dated August 15, 2025. So what does all this mean for LogicMark? The big takeaway is the approval of the reverse stock split. Companies often do this to boost their stock price per share. Sometimes a low stock price can make a company seem less valuable or even risk being delisted from major stock exchanges if it falls below a certain threshold, like $1 per share. By reducing the number of shares, the price per share goes up, making the stock appear more substantial. However, a reverse split doesn't change the company's overall market value. It's like trading 10 $1 bills for one $10 bills for one $10 bill. You still have the same total amount of money. This aggressive range for the reverse split, 1 for 300 to 1 for 750, signals that the company anticipates its stock price might need a significant boost. This could be to meet exchange listing requirements or to make the stock more attractive to institutional investors who might have policies against buying very low-priced stocks. The fact that shareholders approve this gives the board the green light to implement this potentially drastic measure to salvage its stock's appearance and exchange compliance. However, the rejection of Proposal 5 is noteworthy. It shows shareholders want to maintain some control or at least some transparency regarding the authorized share count. They're okay with the reverse split, but they don't want the company to have unlimited power to shrink its authorized shares without their say-so. This is a sign of a watchful shareholder base. So looking at the voting patterns, particularly the high number of broker non-votes on the director elections, it suggests a segment of shareholders might be less engaged. But for the core proposals like the reverse split, a significant portion of shareholders clearly did vote and a majority supported the board's plans. The approval on the reverse split proposals, despite the against votes, indicates a belief that this move is necessary for the company's survival or to improve its standing in the market. In my view, LogicMark is facing a situation where its stock price might be at a critical point. The reverse split is a common tool for companies in this position. The success of this strategy really depends on what the company does next. The market will be watching to see if this is just a cosmetic fix or if it's accompanied by fundamental improvements in the business. The rejection of the proposal to freely reduce authorized shares suggests that the board needs to tread carefully and continue to communicate openly with shareholders about any future share structure adjustments. The market will likely react positively to the stock price increase from the reverse split, but the long-term health of LogicMark will depend on its underlying performance and ability to grow its business beyond stock manipulation. Alright, that's our breakdown of LogicMark's latest filings. What's your take on these reverse stock split plans and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.